All right, so welcome to the deep dive. Today, we're going to be talking about TransMedics,
Okay.
which is a company that specializes in organ transplant technology.
Interesting.
Yeah. So the article that we're looking at is from the Motley Fool, and it has
Right.
a pretty interesting title. It's called One Super Growth Stock Down 63% to Buy Hand Over Fist in 2025.
Oh, wow.
Yeah.
That's a pretty big statement.
It is. It is.
Yeah.
So, obviously we've got a stock here that has taken a major hit, but the article is saying that it's a prime buying opportunity.
Okay.
So we're going to figure out, why that is
Sounds good.
and what's going on with this company.
Right.
So to start off, can you explain a little bit about what TransMedics does?
Yeah, so their claim to fame is their organ care system.
Okay.
It's also known as OCS.
Okay.
And basically, it's a device that keeps organs functioning during transport.
Wow.
Yeah.
That's way different than just chucking them in a cooler.
Yeah, exactly. So instead of the traditional method where you're just packing it in ice,
Yeah.
the OCS actually keeps the organs working.
Okay. So
Yeah.
how does that work?
Yeah.
I'm picturing like a little robot surgeon operating on this organ as it's flying through the air.
No, it's not that complicated.
Okay.
But it is pretty high tech. It's like this portable device that basically recreates the conditions inside the human body. It constantly pumps warm, oxygenated blood through the organ.
Interesting.
So it keeps it metabolically active. Not
Okay.
just preserved, but actually functioning.
Huh.
Yeah. Plus, you can monitor everything in real time during transport.
That's amazing. So I'm guessing there are some pretty big benefits to using this system.
Oh, yeah. Huge. I mean, think about it. When you transport an organ on ice,
Yeah.
it's basically in suspended animation.
Okay.
Which, can cause damage and complications. But with the OCS,
Right.
it's like the organ never left the body. It reduces the risk of rejection, improves transplant success rates, and even allows the organ to travel further and last longer.
That makes sense.
Yeah.
So it sounds like it's not just about keeping the organ alive,
Right.
but it's about keeping it in tip-top shape so it's
Yes,
ready
sir.
to go.
Yeah, the healthier the organ, the better the outcome for the patient.
That makes a lot of sense. So the article mentions that TransMedics has seen some pretty impressive growth.
Yeah, they have. In 2021, they did about 330 transplants.
Okay.
And then by 2024, that number shot up to an estimated 3,600.
Wow.
It's a huge jump. They've got 20% of the U.S. market now.
So they're clearly doing something right.
Yeah, no doubt.
But hold on.
Yeah.
The title of this article says the stock is down 63%.
Right.
So why is the stock down so much if they're growing that fast?
That's the million-dollar question, right?
Yeah.
It all comes down to how the market views short-term performance versus long-term potential.
Okay.
TransMedics has grown like crazy,
Yeah.
but that pace has slowed down recently, and the market tends to fixate on immediate results.
I see.
So when the growth slowed, the stock price dropped.
So basically the market is saying, hey, TransMedics, where's that explosive growth we were expecting?
Exactly. They want to see the rocket ship keep going up, up, up.
Okay.
But the Motley Fool article is making the case that this slowdown is just a blip and that TransMedics is set to take off again.
Interesting.
Yeah. They outline 4 main reasons why they think that's going to happen.
Okay. Well, let's hear it. What's the first reason?
The first one is what they call deepening existing relationships.
Deepening existing relationships.
Yeah. So they already work with a bunch of transplant centers,
Right.
but a lot of those centers aren't using the OCS for every transplant.
Okay.
So there's a huge opportunity there to increase usage and get those centers to make the OCS their go-to choice.
So it's like building brand loyalty, but in the transplant world?
Pretty much, yeah. They want to convince these centers that the OCS is the gold standard.
All right. Makes sense.
Yeah, and that ties in nicely with their second growth driver,
Yeah, sure.
Gen Tech.
Okay. Next gen tech. Lay it on me.
They're launching new and improved heart and lung OCS systems in 2025.
Oh, wow.
Yeah, even more advanced than what they have now. These upgrades could really cement their position in the market.
Do you think this technology could be used for other things besides just organ transplants?
That's a good question. There's definitely potential there.
Okay.
And speaking of potential, that brings us to their third growth driver, and it's a big one. Kidney transplants.
Kidney transplants.
Yeah, it's a massive market. There are 25,000 kidney transplants every year just in the U.S.
Wow, 25,000.
Yeah.
That dwarfs the other organ transplants.
It does, way more than heart, lung, and liver transplants combined.
So are they actively working on a kidney OCS?
They are. The article says trials could start as early as 2027.
Wow. That could be a game changer for so many people waiting for a kidney.
Yeah, for sure. Kidney transplants are the most common type, so the impact could be huge.
All right, so what's the fourth growth driver?
This one's all about expanding their reach. They're going global.
Going global, huh? So they're not just content with dominating the U.S. market.
Nope. They're planning to bring their success to other countries by 2026.
That's ambitious.
It is. But there's a huge market out there. Around 40,000 transplants happen every year outside the U.S.
That's a lot of potential patients.
Yeah, it's a huge opportunity. But breaking into new markets can be tricky.
Right. What makes them think they can replicate their success internationally?
Well, they've already proven they can do it in the U.S.
True.
Plus, they're in a good financial position.
Okay.
And their business model is scalable.
Makes sense.
And they've built this incredible infrastructure to make it all work. You know, they have a dedicated command center.
Wow.
And a whole fleet of 18 planes just for transporting organs.
18 planes. That's wild. So they're not messing around. They're really going all in on this.
Yeah, no kidding. They're serious about making this work.
Okay, so they've got this groundbreaking technology.
Yeah.
They're growing like crazy. They're expanding globally.
Or-
They've got the infrastructure to support it. But here's the thing that really blows my mind.
What's that?
They're already profitable.
It's pretty impressive, right? Most companies at their stage are burning through cash just to grow.
Yeah, you'd think they'd be in the red, investing so much.
Exactly. But they've managed to balance growth with profitability. That's rare.
That's got to be a good sign for investors, right?
You'd think so. But here's the thing. The market doesn't seem to fully appreciate it.
Wait, what? Why would the market overlook something like profitability?
Well, as we talked about earlier, the market can be a bit short-sighted.
True.
They're focused on that recent slowdown in sales growth, even though it's likely temporary.
Okay.
And because of that, TransMedics is trading at its lowest ever price-to-sales ratio.
Hold on. Let's break that down for our listeners.
Yeah.
The price-to-sales ratio, what is that exactly?
Sure. It's basically a way to measure how much investors are willing to pay for every dollar of sales a company makes.
Right.
A lower ratio usually means the company might be undervalued. So the market's basically saying, we don't care that you're profitable and building a strong foundation.
Yeah.
We're more concerned about your immediate growth rate.
Interesting.
And that disconnect, that difference between market sentiment and the company's actual potential.
Yeah.
Well, that could be a buying opportunity.
Okay.
The Motley Fool article even compares TransMedics to Intuitive Surgical.
Intuitive Surgical.
Yeah, it's a well-established med tech company, kind of the gold standard.
Okay. So how do they compare?
Well, Intuitive Surgical is trading at a price-to-sales ratio of 24.
Okay.
TransMedics, on the other hand, with all its potential and profitability, is trading at a much lower ratio.
So essentially you're saying that investors can get more bang for their buck with TransMedics.
That's the argument, yeah.
Yeah.
That TransMedics is undervalued compared to its potential.
Wow. So the market's short-term focus has created this situation where a company like TransMedics,
Right.
with so much to offer, is potentially a steal.
That's the idea.
This is fascinating. So what else does the Motley Fool article highlight about TransMedics?
Well, one thing they dive into is how they're achieving this profitability.
Interesting. So let's talk about that. How are they managing to be profitable while still pouring money into all this growth?
It's really interesting, right? I mean, they've built this whole logistics network practically from scratch.
Yeah, 18 planes. It's not like they're cutting corners.
No, not at all. And yet they're still turning a profit.
So how are they doing it? What does the article say?
Well, they've had multiple quarters of profitability, even with all these investments.
Yeah.
And not just paper profits, but positive cash flow, too.
That's huge. It means they have money to reinvest and keep growing.
Exactly. It makes that low price-to-sales ratio even more appealing.
Right. It's like the market isn't giving them enough credit for their long-term potential.
Yeah, they're too focused on the short term. But the article does bring up something else we should consider.
What's that?
The risks. Investing in any company has risks.
True. Every investment has a downside.
And TransMedics is no different. There are some potential challenges they could face.
Okay, so let's talk about those. What are some of the risks investors should be aware of?
Well, one thing is competition. Right now, they're the leader in this technology,
Yeah.
but other companies are trying to catch up.
Of course, you can't stay ahead forever.
Right, and that could squeeze their profits or market share down the line.
Makes sense. What else?
The regulatory environment is another one. Organ transplantation is highly regulated,
Oh, yeah.
so any changes could impact them big time.
That's true for any healthcare company. They have to play by a lot of rules.
Exactly. And speaking of rules, the article also mentions reimbursement as a potential risk.
Reimbursement.
Yeah. The OCS is pretty new.
Right.
So there's no guarantee that insurance companies or government programs will cover it fully.
Oh, I see. So even if it's better for patients,
Yeah.
it might not be adopted if it's not financially feasible for a hospital.
Exactly. They have to prove it's worth the investment.
Which means collecting data, showing it actually saves money in the long run.
Right. And luckily, they're already doing that. Some studies show the OCS actually reduces overall healthcare costs.
That's great. So it's better for patients and better for the system.
Exactly. It's a win-win.
So we've talked about competition, regulations, reimbursement.
Right.
Are there any other risks investors should know about?
Well, there are always the general risks that come with any medical technology,
Right.
like complications with the technology itself
Yeah.
or liability issues if something goes wrong.
Right. Those are always possibilities you have to factor in.
Exactly. It's a high-stakes field.
But it seems like the potential rewards could be huge, too.
They could be. It's a fascinating case study, this company.
It is. It's like they're on the cutting edge of medical innovation.
Yeah.
But they also have all these challenges to overcome.
It reminds us that investing isn't just about the numbers.
Yeah.
It's about understanding the whole story, the company's mission,
Absolutely.
the people behind it, the bigger picture.
Right. It's about looking at the upside and the downside.
Exactly. And speaking of the bigger picture,
Yeah.
there's another aspect of TransMedics that I think is worth highlighting.
Okay, what is it?
The human impact.
Oh, yeah. That's something we haven't really touched on yet.
Right. It's not just about the financials and the tech.
Right. They're actually saving lives.
They are giving people a second chance.
That's got to be a powerful motivator for the people who work there.
Yeah, for sure. And for investors, too.
Right. It's not just about making money.
Nope.
It's about being part of something bigger.
Exactly. Making a real difference in the world.
Okay. Well enough with the heartwarming stuff. Let's get back to the numbers.
Okay.
What does the article say about TransMedics' financial performance?
Well, they highlight their strong revenue growth and expanding gross margins.
That's a good sign, right?
Yeah. It means they're becoming more profitable.
Okay. So what else should we be looking at to assess their financial health?
Well, besides revenue and margins, we should look at their operating expenses, their cash flow,
Okay.
and their debt levels.
All right. So let's dive into those details and see what we can learn about TransMedics' financial strength.
Sounds good to me.
So let's dive into those details and see what we can learn about TransMedics' financial strength.
Yeah. So the article points out that their operating expenses are pretty high.
Okay, that's not too surprising for a company in growth mode, right?
Right, exactly. They're spending a lot on R&D,
Yeah.
sales and marketing,
Building that infrastructure.
Exactly.
But the question is, can they keep this up without hurting their profitability?
Well, that's what the article tries to address. They say that TransMedics has been pretty good at managing their expenses
Okay.
while still investing in those key growth areas.
All right, so they're spending money, but they're being smart about it,
Yeah. And their gross margins are expanding too.
which means...
It means they're getting better at making money from each unit they sell.
Okay, so that's a good sign.
Yeah, definitely. And what about their cash flow?
That's the lifeblood of any business, right?
Yeah, absolutely. And the article highlights that TransMedics has had positive cash flow for several quarters,
That's impressive.
especially with all those investments they're making.
Right, so they're not just profitable on paper.
No.
They're actually generating cash.
Exactly. That gives them more flexibility to keep growing and investing.
Okay, so what about debt? Are they drowning in debt to finance all this growth?
Well, the article doesn't go into too much detail there,
Okay.
but they do mention that TransMedics has a healthy balance sheet
Okay.
and that their debt is manageable.
So they're not taking on too much risk.
It seems like they're being pretty responsible.
Okay, so we've talked about operating expenses, cash flow, and debt.
Right.
And it sounds like TransMedics is in pretty good shape financially.
Yeah, they seem to be managing things well.
So let's step back for a second. We've learned a lot about TransMedics today.
We have.
Game-changing technology,
Yeah.
impressive growth,
Uh-huh.
strong financials, and they're making a real difference in the world. Is there anything else we should consider before wrapping up?
Well, one thing the article doesn't really talk about is the company's leadership.
Oh, that's a good point.
Yeah, because at the end of the day,
Yeah,
a company is only as good as the people running it.
absolutely. So what do we know about their leadership?
Well, I did a little research, and it looks like they have a pretty experienced management team.
Okay.
A lot of them have worked in the medical device industry for a long time.
Okay. Experience is important, especially in a field like this.
Definitely. And from what I could gather, they seem to have a clear vision for the future
Okay.
and a good understanding of the organ transplant world.
So they know what they're doing.
It seems that way, yeah.
All right, so as we wrap things up here,
Yeah.
what are your final thoughts on TransMedics?
Well, I think they have a ton of potential.
Yeah.
They're on the leading edge of this medical technology revolution.
Their product is literally saving lives.
Exactly. And financially, they're doing well.
Yeah.
They have good leadership and a clear strategy for growth.
They're not without risks, of course.
Of course not. But the potential rewards seem pretty big.
Yeah, I'd say they're definitely a company worth watching.
For sure. Anyone who's interested should definitely do their own research.
Absolutely. Dig into those financials, read some reports, stay up to date on what they're doing.
Exactly.
Well, this has been a fascinating look at TransMedics.
It has, yeah. Always exciting to learn about companies like this.
I agree. And that's it for this deep dive into the world of TransMedics.
Thanks for having me.
Thanks for joining us. We'll see you next time.